Please welcome our first panelist to the stage. Oh, you have no slides. Okay.
Good morning, everyone. We're billed as a panel, but we're really just going to have a conversation.
You go all the way down. I'll sit here because I have a cold.
Oh, that seems kind of mean.
It's not you, it's me.
So one thing that's kind of a relief looking at the awesome arc of the day is that, A, this has been framed as a quick conversation, and B, our job is to kind of lay out the buffet with all the beautiful dishes, not to actually try to address every single interesting issue and question in the room. So that's a comforting goal, knowing that there's so much to come throughout the rest of the day, and we'll try to do it justice.
My name's Matt Orsagh. I do have my nice FM DJ voice because I'm getting over a cold. I haven't traveled to Asia. I've just traveled in my house with 4 little children, so that's where that's
Even more perilous.
Even worse, yeah. I'm from CFA Institute, Director of Capital Markets Policy. I see the time ticking away, panicking that we don't have enough time, but we want this to be as interactive as we can be, so we're going to talk for about 20 minutes or so. But actually, we were on a panel last year together. We're here, and then we're going to be at our CFA conference in a couple months, so we're going to talk a lot. So we may only talk 15 minutes or so. We want to get to your questions because we assume you have them. So we're going to start out just kind of what the landscape is of sustainability, ESG. So I'll pass it to you, Katherine. So just what do you see as kind of the landscape of where we are, and then I'll fill in.
Absolutely. So as you all know, you wouldn't be here if it wasn't a lively landscape with a lot of things evolving. I'll tell you a little about what I've observed and then tell you a little about how my work fits into that landscape, just so you can orient any specific comments that I make. We've seen some massive shifts. One thing I like to do for fun is I kind of lay out the whole Dana Meadows systems change list of different leverage points, and I kind of list all the things that are happening within investing in finance. I know that's like fun, maybe in quotes, not like capital F fun, but it actually is pretty cool. When you do that, what you see is that there have been shifts at almost every layer, from sort of an ethos and cultural layer all the way down to like tools and mechanics and the more nitty-gritty how things get done. And when you see that happening in any system at any point in time where there's change at every layer, it usually means something's really happening, like it's really going to stick. You don't always know exactly what form it's going to take, but it's not going the other way. So we've already seen this massive shift. You already heard about this shift from why not from why to why not. That alone, like there's a lot in that phrase. I've seen a big shift in my work from, instead of this being either or as kind of a mindset, it's an and mindset. Why would you consider ESG analysis? Well, it's actually additive to your investment process. It's not taking anything away. Right. These sound like really simple changes, but they are really fundamental, and along with that, we've seen a lot of changes in tools and tactics. So I started out as a very traditional fundamental investor. I spent almost 18 years at Fidelity. I ran the research department there. I had 10 years exploring in deep sustainability and impact. I went to divinity school. I wrote a book on biomimicry. I had my own research firm, and now I'm back in an institutional setting at Putnam where I'm putting this into practice, managing 2 large sustainable equity funds. That's a weird roundabout path, but it actually reflects a lot of these bigger shifts that we're seeing. And the CFA Institute has been a big part of some of these shifts as well.
Yeah, I started in this industry about 20 years ago for a corporate governance rating firm, Governance Metrics International, that's now part of MSCI. And I remember we were just looking mostly at corporate governance at the time, and this is 2000, 2001. And we got some angry letters and angry phone calls and angry emails from companies. Why are you? No one cares about this. Why are you doing this? You're bothering. You're wasting our time. We don't have time for this. And now think of the cultural change, and that's the way I look at it. And that's what Katherine alluded to. It's a cultural change we've seen from those times to about the 10 years after that, governance started to be accepted as kind of just table stakes of analysis. I had some really interesting times. Governance metrics. Some like the companies I looked at were WorldCom, Enron. I had Fannie and Freddie, so I had a very interesting time. And I have a lot of interesting stories about corporate governance. Corporate governance isn't as exciting as it used to be. There were a lot of shady...
Which is the good news.
Which is good, which is good. There are a lot of boards. The audit committee was all golfing buddies of the CEO and those kind of things. Board members on 12 different boards. Interesting things you don't see anymore. And then the E and the S started kind of coalescing with the G over the last decade. And I think we're at an inflection point for the E and the S, where we were with G. about 3 years ago, we did at CFA Institute, we partnered with PRI, Principles of Responsible Investment, to better understand how ESG was integrated around the world. So we traveled all over the world. We held 23 different meetings, workshops and meetings, and surveyed members and investors, 17 different markets, 23 different cities. And we kind of took the pulse of where things were 3 years ago. And we did a survey and we asked everybody, what is the current state of integration of E and S and G into the investment process? How important is it investing in influencing your analysis of equities, fixed income, and sovereigns? And not surprisingly, governance was way out ahead. But we also asked, what do you anticipate this landscape being like 5 years from now? And the survey was done at the end of 2017, and we're about halfway to 2022 now, from where we did it to the end of 2017. And in every market we went, from the Netherlands to Brazil to South Africa to Canada and to Singapore and everywhere in between, the E and the S almost caught up to the G and how influential people thought it was going to be. So people saw people who were, and they weren't ESG experts or sustainability experts, they were just investors who were in the industry a couple of years ago. And that's what we've been seeing as well. We've been seeing a cultural change where it gets from the angry phone calls and angry emails 20 years ago to the how can I help understand this transition.
And I think for most folks in the room, you'll be familiar with the CFA curriculum as well, and this is a big kind of bedrock body of knowledge for our field. Having this integrated as part of that curriculum also is one of those key leverage points. Like folks who are coming into the field now, they're just learning this as like compulsory exercise, not something optional off to the side. It's a big deal.
Yeah, I was CFA Institute, the home office is in Charlottesville, Virginia, and I spoke to a class, undergraduate business school class, or undergraduate business class at UVA last week. And it was an ESG sustainability class. Now think about that. 10, 15 years ago, those things didn't exist. ESG governance got into our curriculum about 2003, 2004, so it's been there for a while. So generations of folks have trained through the CFA Institute and understand governance is just what you do. It's just part of analysis. And then E and the S has made its way in a couple of years later, but for about a decade, people who have done the CFA curriculum have had E and S readings. And now it's more integrated into kind of case studies where you may be writing the case study may be about an endowment writing an investment policy statement, and it's incorporated into that. And there's classes at business schools all over the world, like the one at UVA, where this is just a business class. It's just baked into what you do if you're an analyst or if you're a portfolio manager. And so that cultural change is happening where you see our members and you see the investment industry worldwide. It's going to 10, 15 years from now. I'm curious if we have these esoteric conversations at conferences about is there going to be an ESG breakout session
That's separate.
10, 15 years from now, because there won't need to be in a lot of cases.
Yeah. And this is a big deal. So this intertwining of kind of the cultural shift and the initial premise and some of the tools has been really key when it comes to practicing fundamental analysis and active investment management, which is what I do. So for the longest time, even for folks who were devoted philosophically to ideas of sustainability, then you go to open up your spreadsheet, there's nothing to put in it. It's a very highly dissatisfying exercise for a long time. There has been so much time and attention, including from so many people in this room, put towards developing tools and structures and processes and data sets that can actually help to accelerate this activity. And the magic of that is once you have the cultural shift and the tools and the data, then as an analyst, it's shifted from this like, that's an interesting question, to, oh, this is definitely relevant. Right. And now it's directly impacting risk and reward. That's my job. So now I'm in trouble if I don't do it. Again, it flips from this, why would I do this, to why wouldn't I do this? And increasingly, for analysts and practitioners in the field, this is kind of a sign that you actually know what you're doing. So the 3 surprises I've had since coming back into a more institutional setting are all really pleasant surprises. I was completely confident that I was going to spend at least 5 years in sort of internal sales, going office to office, issue by issue, stock by stock, trying to prove that, like, I'm a real investor. I know that this is important. Let me show you why. Almost none of that has been needed. Anyone who's a thoughtful long-term investor at this point is already kind of racing down this path, way faster than I would have guessed. The second big surprise is that the companies we invest in are on that same path. And it's become more and more interesting and more inspiring to discern which companies are rushing to even get started and which companies have actually been investing for 10 or 20 years, sometimes a little bit quietly behind the scenes, who actually have something dramatic to build upon and offer at this point. And then the third big surprise is that folks are ready for bigger action than I might have guessed. Putnam's a neat case study, a little context of our own. We took 2 conventional mutual fund products, transformed them to be our lead sustainability products. There's a lot of skepticism around that as a business tactic, but what did it involve? Our whole board had to agree. We had to go to the SEC, rewrite the prospectus. All the lawyers had to agree. All the shareholders had to agree. All our business partners had to agree that this was a good idea. It is a big deal that actually happened. And
That
even
took like a week or so?
It took a week, just 5-10 minutes. I wrote a little memo, post-it note. But it's a big deal, and it shifted over $5 billion in assets overnight to have this as an explicit investment-related goal, not something separate, not something off to the side. I don't say that to kind of puff up Putnam, but this kind of thing is happening all over the place. It's happening within the companies we invest in, and it's happening at all our peer organizations as well. So those are all really exciting things. When the tools and the intention and the analysis all come together, whew, it's awesome. And you've ignited now the greedy part of finance, which is I can make more money doing this. And that's not always a bad thing to have folks fired up on that front as well.
Yeah, I think one of the most interesting things I've seen in the past couple of years is the focus on. I'm pausing for dramatic effect. Is the focus on materiality. And for the longest time, there was always the argument, ESG, they're very squishy kind of metrics. How do I measure that? How do I put it in my spreadsheet? How do I put it in my quant model? I can't do this if I can't do that. And when we went around the world with PRI for these workshops about 2 or 3 years ago, wherever we went, whether it was the most sophisticated ESG investors in the Netherlands or Brazil, where they care very much about governance, but they're not really looking at E&S at this time. Wherever we went, about a quarter to a third of the folks in the room, and these are sophisticated investors, thought ESG, sustainable investing, was about negative screening. And that was a breach of their fiduciary duty. We can't talk anymore, we're done. And again, but that gets to the cultural change. I think that's, this all started, or a lot of the SRI community started around apartheid years ago. And it grew into negative screening in a lot of different areas: alcohol, tobacco, firearms, all those kind of things. And so that mindset was there from the SRI community or sustainable investing community where, this is negative screening. And what's grown over the past couple of years is there's a lot of different ways to do this. And what I've seen in looking at, SASB started 6 or 7 years ago based just on materiality. And I think that's a great resource for everyone to start with, whether you're an analyst or a portfolio manager, or you're an endowment, or a foundation, or wherever you are, to have a common set of metrics that everyone can sort of agree on to start from. Take me back 20 years ago when I was at this firm, we were looking at, we were trying to figure out what the metrics were that mattered. We started with like 300 metrics, which is probably a bit excessive. But we're trying to figure it out. And I think one of the great things that Services SASB's done is they've worked with industry, they worked with issuers and the financial industry to focus on, okay, if you're in this industry or this sector, the beverage sector, what are the 8 to 12 metrics that really drive, that are material to this company? If you're Coca-Cola, since we're in Atlanta, water and access to water is an issue you can't ignore. ESG metric number 75, that might be nice, but that's not something that we're going to worry about strategy-wise at Coca-Cola, or as an analyst, I'm not going to worry about. And so it's good to have a common language around materiality. If we're 2 different analysts at the beverage industry, I may think there's really 12 metrics, Katherine may think there's really 8 that matter, but we can have a general agreement of where we're starting from. And I think that's a great development. And then climate, things like the TCFD are a great development. But being able to go to meetings like this that we've been going to for years and talk about, no, you can put this in your spreadsheet. This is material. It's part of the story you need to understand. Or to get it if anyone suffered through the CFA exams, the curriculum in here, the mosaic theory. It's a tile in the mosaic to see the whole picture of the company. there may be 100 tiles in that mosaic, and 2 or 3 of them may be ESG information, but it's still important to have a fulsome analysis of what you're doing. You need to understand what's material and what matters, and more and more people can't ignore that ESG is part of that.
Yeah. And again, I think all of us in this room, if you're in this room, you're in some sort of bridging or translation function, one way or the other, in your own personal and professional setting. And so one thing that is terrific about the SASB framework and other tools that are underway is that they help with that bridging, right? Like, here is the map. Now we can argue about the map, and whether this should be in column A or column B, or this should be higher on the list or not.
Right.
But you're not inventing the map for the first place. You're not disagreeing about whether or not there even should be a map or whether or not this is territory worth exploring. I'm curious, so we've talked a lot about the things we're very excited about, even in this first couple minutes here. Is there anything about that's giving you pause that you're witnessing now, or anything that's on the horizon that you're a little concerned about?
Not concerned, it's just the...
Aside from like end of life as we know it, but yeah.
Are you talking about my cold? Or I'm just trying to make it through the day. And then I've got to go back to those people at the end of the day. Get on the airplane. I'll carry new germs to them to get them sick again, and then I'll get that. No, I think it's just the enormity of the task. That sounds like a heavy thing, but it is. You hear comparisons to what needs to be done to mobilize for climate change is akin to a world war and that kind of planning. And you can say, yeah, okay, now let's get to it. And it's a big task, and it's a big cultural shift. And those cultural changes are, super tankers changing direction in the ocean. It takes time, but we seem to be on the right path. And the challenge is to accelerate where we can accelerate, to get things done quicker, better. So those obstreperous rapscallions in Charlottesville who gave me my cold can have a better world to live in, and their children can have a better world, because that's what it's all about in the end, and that's why I care about it, and I'm pushing to learn more about it, and pushing CFA to do more about it. And that's something that I think we should all leave this day from. I know it's just the morning, but I'll give my end of the day message now. Is what can I do? What can we do to move this forward a little bit? To get my endowment or my community to move a little bit more forward in this.
I'll add from my standpoint. The flip side of the coin, I'm super optimistic. We're accelerating. We've got more tools. We've got more intention. We've seen this big cultural shift. The concern, therefore, has shifted from, things aren't moving or they're not moving fast enough, which there are still some things in that category. The flip side of that is once things start moving and moving quickly, they get a little tippy at times. And so I can't tell you how many conversations I've had with folks who are brand new, awesome, eager enthusiasts, and they really quickly want to get going and say, like, okay, give me the number. I'm like, okay. I could give you a number, but I'd really rather not. Could we talk about why that might not be a good question to start with? We're seeing the same when it comes to policy making. We're seeing the same when it comes to the machine of ESG bureaucracy, which I'm cheering on one side with one arm and kind of, shaking my fist at with the other. I mean, we could easily end up with a series of very complicated protocols and reporting structures that give us a big stack of beautiful reports in 5 or 10 years and not the actual impact in the world that we want to see. And so I worry that the machine has a great capacity to accelerate, and the human element of this, the part that we're doing today, like the harder conversations, the more nuance digging in, the steps number like 1, 2, 3, 4 on the spectrum and on the roadmap that's been put forth here, those are the things that take a lot of time, and some institutions, some organizations, some individuals have tremendous capacity for this, and some do not. And so I know, I speak for many in the room, like if you think you can get to a thoughtful, holistic, investment statement without actually working through the part where you're yelling at each other and re-examining like the purpose of capital and the mission of your organization, like can't skip, right? And finance is very good at skipping. And so I want everyone in this room to maybe join together in upholding not just the spirit, but the true purpose of why this is all happening, and not cheering on the machine without a little bit of caution. We have 1 minute left, and we're supposed to end on things that we see as potential solutions that are out in the world, and that's a big minute. And again, we got a whole day to explore. What would you want to highlight there, Matt?
I would say educate yourself as much as you can. I saw the book Drawdown out there. I talk about that whenever I can to people because it gives people a list with numbers, and I'm as cautious about give me a number, and I'll manage to that number as anyone. I don't want a board saying what's our MSCI score and how can we improve it, because that's not really the point. But things like that, and there's a lot of great. We're at CFA we just started looking into. We are doing a report on climate that will be out in September. So I'm doing a lot of research, and I'm seeing a lot of good research out there. So educate yourself, whether it's academic research or brokerage research. I don't have a lot of time, so I will tell you if you ask me. But a big one is that I'm trying to help CFA Institute push for, and I think all of us in this room should push for, is a price on carbon, because that's a market solution that isn't perfect. And it's not a magic bullet, but it's the biggest bullet out there. That will help markets and us do our jobs. We're analysts and we're portfolio managers, and we want to know what is the price of this, what is the cost of this. About 20% of the world has some kind of carbon market now that's only going to increase. And so in our scenario analysis, to imagine, okay, the price on carbon is something reasonable, 40 to 60 prices per ton, whatever it may be, but have that in your discussions, your analysis, because that's going to prepare you for the world when that does come, because it's coming rather soon.
And I would just say that my answer to this question about the range of solutions is embedded in the question. There is a range of solutions. In a lot of conversations I've been engaged with, we end up getting a little micro-focused on one particular solution, like a leaf on the tree. And to step back from that and realize if you're stuck on one leaf, like go to the next leaf. Like there is so much that can be done here. And I would ask of everyone here to maybe take the time to reflect on the same thing that I ask companies we invest in, the same thing that I have asked internally at Putnam, which is what is it that's so great about us to begin with? Like what is it that I can contribute to this broader conversation? So if we're talking about endowments in particular, what a neat perch, right? It's inherently long-term capital. It's inherently completely intertwined with a noble mission. It's usually very tightly intertwined with a physical place that has special characteristics and a particular community that brings something that's really unique. If you can start there and build on that to link, to your investment policy and to the tools that you're going to use in the strategy you're going to take forth in the world, everything else is so much easier. And if you pick a leaf on the tree that is in conflict with one of those roots, even if you win in the short term, it's hardly ever going to stick. And so what a great chance we have here while we're all together, and we've explicitly been set up in conversation with one another for today to explore that human piece alongside the awesome technical part where I live most of my days. So thank you all for being here and being part of the day.
Stay right there.
Okay.
No applause.
If we've got one or two questions from the large group, and I'm going to ask the first one. I'm going to ask it on behalf of that third of you who are new to this topic. What is SASB? Would you please? Right. They can look it up, but they need to know what those letters mean.
Yeah. Do you want me to do it? Go ahead. Okay. Just try to save your voice.
Sustainability Accounting Standards Board. They were started about 6 or 7 years ago. They're based in San Francisco. And their reason for being is they're focusing on materiality and the SEC's definition of materiality. And they go sector by sector and look at what are the different metrics that are material for that sector. And it's generally 8 to 10, 12 different metrics they focus on. So you as analysts or portfolio managers don't need to focus on those 300, but can focus at start your conversations, whether it's engagement with the company or in your investment team, about, okay, how do they rank on these? Are they doing well in these 5, but not well on these 5? Can we engage on these 5? Those kind of things. It's a framework for understanding what's material around ESG.
You can just go to sasb.org. It's all public access. It's a nonprofit organization, so unlike some other tools, it's open to you, which is awesome. And again, it's this awesome bridging function. So if I go to the beverage analyst, it's things they recognize. It's not a list of 300 things, 4 of which they recognize, and the rest are a mystery. It's a big deal.
Quickly before George jumps in.
Yep.
PRI stands for?
Principles of Responsible Investing.
Okay,
I
and
feel like this is a quiz.
TCFT. I was writing them all down. TCFT.
TCFT is Task Force for Climate Disclosure.
All right.
It came out of the UK, and it's what it says. It's a framework for companies to disclose what they're doing, what their strategy is, what the governance of the board has around what metrics they use for climate disclosures.
Great, so I took care of what was the first 3 questions in the room. Are there any other burning questions before we go into groups? Oh. Yeah.
Since we're doing
Just yell, it's fine.
Since we're doing definitions, I just thought it would be important to outline who we have up there. Certain Putnam Investments, large investment firm, you know that, and the fact that you have sustainability. That CFA Institute, I'm a CFA, and I've been long involved in educating. CFA is a 3-year study, self-study program that's equivalent to a master's degree in the UK. I haven't certified. I'm not a CFA. I was involved in CFA UK. I've been on the capital markets committee for many years until they threw me off for retirement, and I'm allowed to say this apparently. I grade exams, so it's very difficult. But I just want to read you, just so you understand, for those who are not involved. The CFA Institute on the website, they said, manage trillions of dollars of wealth on behalf of investors around the world comes with great responsibility and duty. Our members are continually faced tough questions that demand smart insights and answers by pursuing professional knowledge, placing clients' interests above their own, and leading with honesty, transparency as they drive confidence in the investment management profession to benefit society as a whole. And the fact that now CFA Institute is thinking about this is really significant. And I think there's going to be a step change. So I just wanted people to understand, what do you have? What's the number? 125,000 CFAs around the world?
I think it's like 160, 170 now.
60, 70, and probably the number of people taking the exam is
It's over 200,000 sit for each year.
So it's very big in the investment profession. Not everybody knows that, because if you're not in the heart of like managing Putnam Investments, so I want people to understand that. I've been lobbying for a CFA Institute member to become for years. I've come to the very first 2014 conference. The other thing I want to say is everyone should read the New York Times. Andrew Ross Sorkin has just done an interesting report based on Larry Fink. You know, he managed that small firm BlackRock with $7 trillion investment. His latest letter is all in on this subject. You should know how all in it is. And if Larry Fink says it's important, all those companies are also thinking. So those are
Thank you,
just a
Joe.
few thoughts.
So I think we're going to go to the group discussion.
Terrific.
Thank you very much
Great.
to our panelists.
Thank you.
Thanks, everyone.